Foreign central banks now own more gold than U.S. dollars for the first time since the central bank fire sale of gold when Nixon finished off the gold standard that FDR had mortally wounded in 1933, is the N9 for paper money and its last man standing, the greenback. What's causing the gold flippening is two things: the political weaponization of the dollar and the catastrophic buildup of federal debt with, after this year's big beautiful bill, no end in sight. So first, the numbers. Going into COVID, in December of 2019, the world's central banks held roughly a third of their reserves in U.S. dollars and just 13% in gold. Then came COVID, which took annual deficits from under $1 trillion to $3 trillion a year in 2020 and 21. That bumped gold to 14% on the eve of the Russian invasion of Ukraine, to which the Biden administration responded by freezing Russia's central bank dollar, something we didn't even do in the height of the Cold War. This put countries around the world on notice that their dollars, which had been considered good as gold, were in fact vulnerable to confiscation if America did not like you. At one major summit, the president of Indonesia said it out loud, pushing diversification because, quote, look what happened to Russia. Meanwhile, of course, those $3 trillion deficits and the near double-digit inflation they caused led to a flood of gold buying by central banks as insurance. As senior Dutch banker Art Hoben put it, quote, if everything collapses, the value of gold skyrockets. In fact, the past 3 years, central banks have bought more than 1,000 tons of gold per year. Before Nixon, it was more like 100 tons per year. This is led by China and Russia, but also Turkey, India, Poland, Gulf Arabs. This all took gold share to 22%, nearly double in 5 years. And it took the dollar down to just 1/5. What's more concerning is not just central banks. The greenback is in decline across the board. Its share of world trade is now under 40%. That's down from 52 10 years ago. Its share of total global reserves is under half, down from 73%. A move Morgan Stanley currency guru Stephen Jen calls, quote, stunning. So what's next? Brought to you by I Trust Capital. While the dollar's in decline and gold's on the march, the dollar is not dying tomorrow. Because network effects in currencies mean even if paper money is dying, the U.S. dollar will get stronger on the way as it absorbs currency demand from even weaker currencies like a giant money Borg, the healthiest horse in the glue factory. This is especially true with the hype BRICS currency degenerating from gold-backed Goliath to goofy currency basket. Indeed, the dollar's lost almost 90% of its value in gold since 1996, yet its value in other currencies is actually up, the so-called dollar index. In other words, gold rise is not a dollar crisis, it's a government-printed paper money crisis driven by government debts. It won't break tomorrow, but with permanent trillion-dollar deficits, it is only a matter of time. Read the rest with all the gory details at prophecy.com. Okay, we'll be watching. See you next time.